What's up, YouTube? Today is day number 29 of the $1,000 account challenge, and it's a red day. Today we're down $93 in the account, or 3.9% of the total portfolio balance. Now, if you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options to see how far we can grow this account. We've got a big week this week. We've got a lot of big names reporting earnings. We've got FOMC. We've got the Fed rate decision on Wednesday. So I knew going into today that it could be a hesitant market. We could see some chop early on in anticipation of those larger earnings reports and the things that come out from the FOMC meeting. So I tried to take it light today, though, you know, I kind of did break a little bit of my rules to get in on a couple of trades prior to the trigger level break, and, you know, that obviously backfired. But the loss here is managed. It's a $100 loss, and I think it's something that we can easily make back. So let's start with a day trade watch list. Straight off the watch list, we had Disney as a long idea above $96. And in the alert room, this is where I placed two of my trades, one of them being the loss and the other one being the break-even trade. So Disney, I initially took the stock long. So Disney, I tell you right here, 9:38 a.m., I loaded it long, give you the contracts, no position yet. What we got right after the open was this big rally up on Disney above 96. And while the stock did not close above 96 on the 5-minute time frame, I liked the pullback that we were getting. Oftentimes, when you get a big run like this, you will have a larger pullback. So I didn't expect it to hold 96, which is why I did not take my entry up here. What I did expect it to do, though, if this was going to continue to run, is put in higher lows. So our last low was here, which means that on any sort of dip down, it should hold that low as a point of support and put in a higher low for the rally back up. So I took my chances on this trade, understanding that this old line of support should continue to hold as a point of support if this is to continue up, and I went long on the dip down here at 9:44 a.m. So 9:44 a.m. timestamp for you, Disney. I took my entry, give you the contracts, give you the fill price, and I tell you my stop loss is at 95.60 or 10%. Again, 95.60 being down here, the next swing low, or 10%, whatever one hit first. So we do get the move up. We are green on the trade right away. I don't think that we're ever up 10%. We're pretty close to 10%. And what Disney decides to do then is put in a lower high and then a lower low rather than give us that continuation up. So it's a trade that I think the risk off amount was pretty good. You know, risking off on a break below this line of support, risking off that much with potential reward up to the high of day looking like that. So the reward there versus the amount of risk was worth it for me to take this trade. Unfortunately, just didn't get any follow through after the initial run. So we get the bounce up, the rejection at 96, and then the move straight down beyond that. So this trade here closed me out. This stopped me out at 10%. I did not need to wait on it to get below 95.6 because I was down 10% the moment that this dropped below this recent swing low. Okay, so that was the first trade. Next trade, we get the rally back up to $96. And I'm thinking, you know what, maybe this is something that we could go long on because it's breaking the downtrend trend line here, right? Maybe this is something that we can go long on for the rally up to 96, through 96, and then up to the high of day. But I was watching this and I saw the rejection there at 96, and I saw it rally back up and reject 96 again, and I'm like, you know what, this actually looks like something on the larger time frame here that might break down back towards the previous day's closing price. So understanding that we were rejecting 96 and not reclaiming it, I flipped the position. Rather than trying to go long on a dip on Disney for the move back up, I decided to go short as this is breaking this bit of consolidation right here. Another really good entry. You know, we entered the stock short 10:03 a.m. or 10:02 a.m. Let's see what we time stamped here. Disney loaded this short. Disney took entry short. Yeah, 10:03 a.m. Again, giving you the contracts, giving you the fill price, giving you the stop loss. And that alert came out twice there. And then I wound up closing it at break even because I did not like the move back up on SPY. So entered the position short here. We do get the move down. We are green. We're never quite up 10%. We're close to it, but never quite up 10%. Again, I was just looking for the move down towards the previous day's closing price. We didn't get that at this time on this candle. SPY starts to bounce up towards the high of day. And I didn't want to be short on a position while the overall market or the market sentiment is pushing up. I didn't want to fight the trend. So we do get a bounce candle up on Disney, and I wound up closing the position out about halfway through this candle for a break-even trade. Now, I could have held through that probably. I don't think that I would have been down much. I probably wouldn't have closed it. I could have held through it, and I might have been up 10% down here. But this morning's consolidation and chop and back and forth motion on SPY, I mean, you can see this price action super wonky here. It was just not worth it for me to stay in the trade, especially this is that reversal moving up on SPY here. It wasn't worth it for me to stay in the trade while SPY is totally reversing and running up into the high of day. So the risk there, I don't think was something that I was ready to take on. So I just decided to close that position out for a break-even trade. And that was it for the day. I called it a day after that, and this is what I said. As noted in the pre-market session, today's price action might be hesitant and unclear until those larger names report earnings and we get through FOMC. So with that being said, I called it a morning, but I also mentioned that this is what we can expect all week until those news drops pass us by. So don't let a day like today discourage you. If you're small red, if you're small green, or if you're big green, those are all winning days. It's those big red days that you really want to avoid. It's something to be expected, this price action today, and we can't say that we were not surprised by this back and forth chop. So that's it for these trades. I hope that the video has helped you out. Press that like button for me if you haven't done so already, and subscribe to the YouTube channel as well. I post some pretty cool content every now and then, and it's just the best way to support me as a content creator. Plus, it's free. Thank you so much, and I will see you tomorrow when we continue the $1,000 account challenge. Cheers.